How to find great companies to invest in. How to find the best stock to invest. It is a common concern among new investors. It may seem complicated, but the underlying rule to stock picking is simple. Once you master these rules, it will be easier for you to spot the best stocks to buy. We have Chirag, an investment expert, with us today to demystify how to identify great companies to invest in. Chirag, over to you.
To find those companies which are great companies, and how to find the great companies. So you have to find the great businesses. What are the great businesses mean? Generally, commodity driven business is not great businesses, because, for example, if the commodity prices goes up, the company's profit will grow up and company stock will do good. But how to predict that commodity prices will go up? Nobody can predict it, right? So if the profitability of companies depending on an external parameter, they are not the great companies. For example, if you are into business of cultivating rice, you can't make money because selling price is not in control, the production cost is not in your control, and the environment is not in control. So those commodity driven businesses are always on the mercy of the macroeconomic indicator, right? That's why most of the farmers can't make money. But if you can really make very good biryani out of it, there is a 100% ROE business, right? So you need to find out those biryani kind of businesses which can maintain, which have the pricing power, number one, which can maintain their profitabilities despite of adverse situation. Like if, for example, if the rice prices go up, they increase the price of the biryani or they reduce the quantity, but they always maintain their margin, right? So you have seen this way many of the FMCG product. If the raw material cost increases, rather than increases the price of their biscuit, they reduce the quantity of the biscuits, right? So that is how they maintain their margin. So if you have gone to nowadays, if you have gone to any tea's cab around the road, they have reduced the size of the cup by almost 3/4, right? 1/3, right? So now it has remained only 3/4. So they have reduced the uh, size of the glass by 1/3, because they just wanted to absorb the raw material cost and pass it into the consumer by reducing the quantity of the tea, right? So that is what is called great businesses. They can pass on their cost to the consumer, which is called superior return on incremental capital. However, a biryani business is a good ROI business. Most of the time it can't be scalable. The business has to be scalable to make good money, right? So if you have one shop today, if you don't open 100 shop in next 5 years, it is very difficult that stock will multiply by 10 times, right? So it has to be scalable, right? And there should be strong governance. And most of the time, so that is what we do at Vito. So Vito Capital, that we try to identify those great businesses. Despite of worst economic situation, they can maintain their profit margin. So when there is a crisis, everything will fall. But a great business, so it is just like pushing a ball into the water, right? So if you are playing with the ball in a swimming pool, if you push the beach ball into the water, so it means there is a crisis and the prices of the stock market or stocks has gone down. Now the crisis will not remain perpetually, right? After some time, the crisis will evaporate or disappear. It means that you are releasing the pressure from the ball. Then three things can happen. If the quality of the ball is good and if there is a good air, it will bounce back and it will actually jump out of the water. If the quality is good and there is good air pumped into the ball. The second case would be the quality of ball is okay. It is not properly aired. So it will come out to the surface slowly, which is called an average company. So they recover with the market, right? And in case of first case, actually they recover and they make some return when the market recover also, right? So they were at the higher level than the earlier level from where it has fallen. And the third company, actually the ball quality is bad. There were holes into the ball, and when you push it down, they'll sink inside the swimming pool. And that is what is the three kind of companies. So great businesses, average business, and below average business. So these are the processes you need to identify those great businesses.
Thanks for your precise answer. If you have any questions related to this or any other investment options or related to your financial goals, feel free to book a free appointment with our financial planner. The link to the free booking is given in the description below this video. Also, will you be interested to attend insightful investment webinars? Then feel free to register for our upcoming insightful enlightening investment webinar, and it is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give a thumbs up. Also share it in your social circle. If you are not subscribed to our YouTube channel so far, please subscribe now. Bye.